Okay, good day guys. So you don't here today. So we're talking about ranges for today. I know it has been long since I dropped a YouTube video, and there is a reason behind that. So today, without wasting our time, ranges as it concerns the MSNR course. Now, if this is your first time of seeing my page, I would advise you go check out my videos on MSNR from day 1 to day 4. So this is just the day 5 of the course. So today we're talking about ranges. Now what's a range? A range is just a QM level. And what's a QM level? A QM level is when market sweeps liquidity, makes a break of structure, and then returns back. So this is a range low. So I can call this a range low because if you look at this, liquidity was swept at this level. And what is the liquidity that was swept? Very, very simple. You can see here, this is it. So that's the liquidity that was swept. If I should highlight it, you will see it as this. You will see this is the liquidity here. Very, very simple. Then this here is the break of structure. So we can call this our break of structure. So this is what we call a QM. Now a QM forms a range. And what is a range? A range is a level of money transfer. That means those that are buying, if this is a buy scenario, those that are buying, maybe they bought from a level around here. Around, let's say there is a swing low around here, and they bought from this low. So they bought from this low, market went up, now market came down. They are going to move their stop loss from here to this place, so that when the market comes back, they will not break even. So they will move their stop loss. That's just like an imaginary thought. I'm not saying that this is what is happening in the market. It's just a way to explain it to be simple. They'll move their SL to this point here, so that when the market comes down and hits this point, they will have small profit. Now, them moving their stop loss to this point, they will not move it to a random point. They will move it to a point that is having sweep of liquidity and a break of structure. So this now becomes a strong low. This now becomes a strong low, and most of the time in a trend, strong lows, in a bullish trend, strong lows are hardly taken out. So what will market do? Price will do like this eventually. So eventually price will do like this, come here, and price will continue buying. So that is it. This is what we call the range. This here is what we call the range. A QM level, sweep of liquidity and a break of structure, then a return back into that level is our range. So what do you want to see if you want to trade with trend? So what you want to see is this. You want to see a sweep of liquidity. I'm coming, just give me 1 minute guys. So you want to see a sweep of liquidity, a break of structure, then you buy inside the range. So this is the range high and this is the range low here. So you buy inside the range at your key level. Let's say I'm buying at this QM level. So I buy from here, the market goes up. Then as market goes up again, what am I looking for? I am looking for the market to make a sweep of liquidity, a break of structure, then I have a new range. This is my range high and this is my range low. So I buy inside the range and the trade continues like that. So that's basically everything we do. Now let me show you how to use ranges as it concerns the chart. So when you come to your chart, what you want to see is very, very simple. I don't like wasting time because, as we say, time is money. So if I go to my higher time frame, let's say the 4-hour chart, and I want to pick a range, it's very, very simple. All I have to do is just look at the trend. So you can see this trend has been bullish. So because of the fact that the trend has been bullish, what will I presume? I presume that I'm buying at range levels. So if you can see here, there is a sweep of liquidity around this area. Sweep of liquidity around this area. I'll mark that out. But let's not start from here. Let's start from here. So you can see this chunk liquidity, there is a sweep of all these liquidities. So after the sweep of the liquidity, what happened next? Something happened. So what happened next? We had a break of structure that gives us a range. So you have a break of structure around this level here. Around this level you have a break of structure. Okay, this is not the break of structure, sorry. The break of structure is around here. Around this level you have a break of structure. Okay. So what happened next? You can see how price came back into the range. Came back. It went high. went high, broke structure, and when you are on the higher time frame, you mark your break of structure by week, not by body. But me, based on experience, I know when to use week break and I know when to use body close above. But for you guys that are beginners, you can use body close. So body close will be preferred. So body close above, the market came back into the range and then bought. So you can see this is the first one you would have caught. You buy inside the range and price goes up. You can see how market bought on this level. This is a QM level. If I show you the entry now, you will see the entry is from a QM level. So I put it on my line chart. Then you can see the level that I bought from. You can see this QM level here. This is the head, first shoulder. Market came back into that second shoulder and formed that second shoulder rather, and then bought. Sweet move there, bagged. So you can even use the line chart to get it again. You can see a sweep of liquidity here, a break of structure around this area, a break of structure around this area and this area. So let's go to the candlestick chart. So sweep of liquidity around here, a break of structure around here. Then you can see how market came back into this point. If I should zoom that out, you will see it. So you guys should give me 1 minute to zoom this out because I don't like using my PC. That's the reason why I'm always on my phone when I'm doing my analysis. I don't use PC. I hate this thing. It's just because of the fact that I'm running a YouTube video. That's the reason why I'm even doing this. On a normal day, I don't use PC. So you can see sweep of liquidity, break of structure, market broke the structure, and the market came back. So when you see market breaking the structure with impulsive candles like this, with BB candles, that's a sign that the next return will be a massive buy. That's a very good sign that the next return will be a massive buy. So that is it. Yeah, we had another one here again. You can see sweep of liquidity, break of structure around here with large body candles. Market came back into this QM level and then we bought. So that is basically all I do for ranges. So you want to see a sweep of liquidity, a break of structure, and you also want to see an internal range liquidity if possible. So let me show you. So if you look at this is a sweep of liquidity, a break of structure. There is no internal range liquidity. The market came back and then market bought. That's a nice one. So in this case now, this is the second case, case 2. So let's say we have a sweep of liquidity around this area here and a break of structure. This means this low is strong. So market now, when market was coming back, market made a pullback that did not sweep liquidity and market went up. You understand? It's not necessary that market must break this high. As long as market goes up to the 50% of this here, from this high to this low, market goes up back to 50% or above, or even break structure, it makes this a liquidity. So market comes down and market takes it out. So let me show you an example. So these are things that I use every day on my chart. You understand? So let me go to gold. Okay, I think I have it here. So let's go to the gold charts. So this is the gold chart. Let's go somewhere below. If I can find something like that. Okay. Now look at this. A sweep of liquidity, a break of structure, market broke the structure, came back, it did not sweep liquidity. So this pull down did not sweep liquidity, then it went up again. So this is our liquidity here. The market bought from this key level, market coming to that key level, and then market give a massive move upwards. So you can just merge your idea of liquidity that I taught in the previous class and ranges. When you mix ranges and liquidity together, it's going to give you an edge. So you guys should hold on for the next video. More will drop, but just when you follow the videos one by one and you get to the final day of the course, it is going to give you an insight on how the Alchemist strategy is traded. So you guys should not forget to like, subscribe, and also follow me on my TikTok pages and be on my WhatsApp channel because I drop signals there and I also drop insights of trade, fundamental analysis, and code. So I'll see you guys in the next class. God bless you all.